Hello and welcome to another Property Solvers podcast. Today I'm joined by Neil Singer from Click to Purchase, which is an online property sales platform. Welcome, Neil. How are you doing?
Yeah, hi, Ruben. Nice to speak to you.
Yeah, likewise. So I've been really keen to bring you onto the podcast for a little while now, in light of your pioneering work in incorporating blockchain into the UK property industry. So I'm going to approach this conversation from a pretty technophobic standpoint, but at the same time, someone who's continually frustrated at how slow things can be in the property and buying selling space, particularly on the open market. So perhaps you can start by giving us a bit of background into your career and how you ended up working in this area.
Okay, so my background is I am a qualified chartered surveyor. I've been specializing in the property in selling commercial investment properties for many years. I started my life at one of the very big agencies in the West End. I then went to a small firm and I started my business quite a long time ago, actually, in the 90s. And we operated like everyone else in the commercial sector, whereby if you heard of a transaction, you would whisper it to a buyer, and you would talk to a seller and whisper to a seller, and you stood in the middle. You were the agent putting the transactions together. That's what one used. That's what one did in the in agency. That's how everyone made their money. You were basically trading information. And then what happened with us is that in the sort of the run up to the financial crash in about sort of 2006, 7, we decided to experiment and do videos on our property sales. And there was a new thing around called a website. I mean, it's not that long ago, but nobody had websites, no one. And we videoed a property. It actually was a Porsche car showroom in Silverstone, and everyone in property loves a Porsche. And we videoed this property. We put it online as we basically put the brochure online, and it sold in 2 seconds. But it was always going to sell in 2 seconds. But what we noticed was the power of the internet in marketing. So we then developed our business to become an open reach marketing business rather than whispering in your ear. And then following the financial crash, we put a Google Analytics code behind our website, and we noticed that people were hitting our website from all over the world. So we thought to ourselves, if we can find the buyers, why can't we get them to buy online? You can buy everything else online. Why can't you buy a property online? Came up with this concept, which we called click to purchase, whereby you would make an offer and the offer generated a digital signature, which was legally binding. And on accepting the offer, the deal was done. So we actually created a mechanism whereby properties could be bought very quickly. And it worked, actually, it worked. And then we developed that on in 2017 to really experiments with the blockchain world, where we added a blockchain ledger, which was creating an audit trail to what we were doing. And that's it. That's basically how the technology developed, really. I think it's changed slightly. I think people now are far more used to doing transactions online generally. But when we started, nobody was doing it. I mean, people wouldn't always buy. People weren't even buying their groceries online. People were very, very cautious of technology. So
Yeah,
that's in a nutshell is the background.
yeah, I think things have accelerated since COVID, especially. Everyone's kind of more accustomed to buying online. I mean, we launched our auction service during COVID, particularly especially for that reason. Because we thought to ourselves, well, more people aren't able to go into the rooms and buy auction properties now, and the demand for online auctions just kind of increased quite dramatically. So that's why we tapped into that space during that time. So in terms of what blockchain is, to start with the basics, probably most people would understand it as being the underlying technology behind Bitcoin and other cryptocurrencies. But perhaps for the uninitiated, Neil, could you describe what blockchain is
Okay,
and broadly how it can be applied to property and real estate in general?
so blockchain has got two concepts. I think it's actually worth explaining where it came from for people who may not know. So you've got because it's actually quite an interesting history for it, really. if we go back to 2008, 2009, the commercial markets worldwide, or most countries, fell apart because of the credit crisis, because banks had been lending. If you remember, people may have seen that film. They were lending like crazy on fictitious valuations, and I think it was in America. What do they used to call it in America? Junk. It was junk, basically junk bonds and junk property.
Yeah.
And after the financial crash, there was a tremendous distrust for the banks, and somebody, if my memory serves me correctly, I think the name was Satoshi
Nakamoto.
Nakamoto, who no one who knows who that is, wrote a paper in California talking about something called a blockchain, a mechanism whereby a transaction could be validated without involving the banks. If you think about how you pay for your lunch on a credit card, when you go to pay, you're giving a credit card, you swipe it, and you're paying. Well, actually, you're not paying. You're actually giving a promise to pay. What you're doing, if you've got a Lloyd's credit card or a NatWest credit card, NatWest are promising the retailer that they will deliver that sum of money to the retailer from the client, and the customer, who's actually owns the credit card, is then also promising to pay the credit card company in X number of days, and the bank takes their fee for the privilege.
Yeah.
After the financial crash and a lot of mistrust of the banks, this paper was written on the basis of removing the third-party authenticity of the bank, and the way it was done was by what's known as a I've slipped my mind. Community. It was a community. It was a community would self-regulate a transaction.
Wow.
So blockchain, and that is really how the whole thing arose. Now, blockchain is based upon two things. Is number one, an immutable audit trail, so that when someone says they own something, it cannot be disproved. And secondly, a distributed ledger, which means that there's not one person verifying the transaction. The best way to describe how blockchain works is, in as simple terms, I think, is as follows. If you imagine 10 files in a row, a music file, a Word document, Excel, a picture file, etc., all in a row, and each one gets poured through a funnel, and out at the other end of the funnel, it all comes out as gobbledygook, X, Y, Z, 1, 2, 3, 4, some sort of a one-way encryption of the information that's gone in. So you've poured 10 pieces of data, it's gone through 10 funnels, and you've got 10 rows of gobbledygook below. And imagine all those 10 pieces of gobbledygook, which is a representation of the information that's gone in, is all scrunched together and moved up to the next line and forms the first piece of information on the next line. And there's another 9 files, Word file, Excel, picture, etc. And each one gets pulled through a funnel. Out comes gobbledygook, which is an encryption, all gets scrunched together into another block, and the block goes up to another line. Now, the point about this is that when you have a hash generator, which is actually a representation of the information that's come out of the funnel, it's a one-way mechanism. So if you change the input in the smallest way, the output is dramatically changed. If people listening were to go onto their computer, look up hash generator on a Google, type in a word like Ruben, and then it'll generate some sort of code for your name. And if you put a full stop on the end, it'll completely change the gobbledygook, the hash that's come out the other side. And that hash may be encrypted, which is as well, but it's basically gobbledygook as far as the listener is concerned. So you have it's unique. So if you imagine that if you change the input in the slightest way, the output gets changed dramatically. And then you imagine you've got 10 of these files all scrunched together. any change in any one of the inputs changes the output of the block that's been generated. And if you imagine block upon block upon block, every time, it is impossible. That's the theory. It is immutable. It's impossible to change the final output, because changing the input in the slightest way anywhere along the line would change the output. So if someone managed to hack in and change the file from 1,000,000 to 2,050,000, the final output would be dramatically changed. So the idea is the ledger is immutable. That's the first concept. The second concept is that the blockchain ecosystem is such that it is replicated on multiple machines, so that there is what's what I'm looking for? Not a consensus. My mind's gone a bit blank. I can't remember. And the point is that everyone is it is self-regulated by everyone in the community. It's a community.
So it's not an intermediary, effectively. There's not a kind of central power.
Well, imagine you were able to hack into the computer and somehow change one of the inputs, and you managed to make the output remain the same. Imagine you could do that. Well, you'd have to do it on multiple machines at the same time on the distributed ledger. It's in theory, it's impossible. So the idea of blockchain technology is that it is a combination of an immutable ledger and a distributed ecosystem which cannot be changed. And therefore, the community itself is regulating the transactions, not a third party like a bank. That's the whole basis of blockchain technology. Now, the problem with it, I mean, I can go to the problems actually, if you ask me, but that's basically the theory behind blockchain technology and why people got so excited, because the idea was that you could do a transaction, not necessarily financial, any transaction, without someone verifying that transaction as a company. It was verified by the whole community involved. That's the basis behind it.
Right. Okay. And how can it be applied to property and real estate? How has it been applied in the past?
Well, we applied it in order to verify a transaction, because what we did is, if you buy a property online, we create this gobbledygook. It's this hash encrypted signatures, which we then feed into a ledger.
Right.
And because we were using hash and encryption technology, we were a natural user of blockchain technology. So in very simple terms, if I were to exchange a contract online at £1,000,000, it would go into the ledger. And if somebody were able to hack into the system and change it to £2,000,000, the ledger would change, and you would see that that ledger has changed. It would no longer match. So the point about it for property is to create an immutable audit trail. That's my view. Right. There are other people there were many businesses that arose talking about a way in which you could use blockchain technology in order to syndicate property. And there was a lot of hype about that in 2017, 18, 19. As far as I'm aware, every one of those businesses has failed. I'm not aware of anyone that has succeeded, but there was a lot of talk about using blockchain technology in order to transact in different countries.
That's tokenization you're talking about, right? Where you effectively got a kind of slice of the property, a share of the property effectively, and you can sell that as a kind of subdivided asset, so to speak.
Right. That's right. Okay. Which I think I never thought would work, because in order to have, just because you've got a token, you still have to clear identity checks in any particular country. So your identity still needs to be revealed. And and just because it's tokenized, it doesn't necessarily mean that the transaction can occur instantaneously. The world of cryptocurrency, and again, I'm no expert. This is just how we've used it. I'm not pretending to be an expert. I just have got some experience. The whole point about cryptocurrency is people have probably heard of what's called a digital wallet. So if you've got a Bitcoin in your digital wallet, it actually means you've got absolute proof that you own that Bitcoin because it's in your wallet. So when someone says, pay me some money, you transfer that money over. It's an instantaneous movement of an asset from one wallet to another wallet. There's no 3 days going through a bank. It's an instantaneous transaction because you've got absolute proof that you own that piece of cryptocurrency.
Right. Okay. And can you talk me through perhaps a few examples of properties that you've transacted through click to purchase? Like, how does it work from kind of start to finish? So, you've found a seller and then you find a buyer. Can you talk me through that process?
Okay, so click to purchase is a mechanism which allows buyers to react quickly to a property that is made available for sale. So there are a number of stages. Property has to be prepared for sale, and in order to be prepared for sale, you need a complete legal package. So the click to purchase system provides for a base contracts, and the solicitor acting for the seller will collate the complete legal package in many ways like an auction, and ideally answer all questions before they are asked. So they are the one goes to the market with a complete legal package.
Right.
A buyer comes along, says, I'm interested in the property. They're welcome to look at the legal package. The first thing the buyer must do is clear identity. They fill in forms online, they clear identity. Having cleared identity, which the agent will sign off, excuse me, they are then able to submit an offer. So rather than go under offer and say, I'd like to agree the deal, I'll exchange contracts in 4 weeks, they have the opportunity to review the legal package and submit an offer. When they submit an offer, it creates a digital contract with a legally binding digital signature. The agent acting for the seller then, on instructions of the client, will accept that offer or may not accept the offer. But if they accept the offer, they place their signature on the contract note and the deal's done. So there's no under offer bouncing backwards and forwards between lawyers negotiating a contract. It's a bit like, it's not an auction, but it's a bit like somebody buying prior to auction by signing a auction contract. Click to purchase is a private treaty mechanism, which is all done electronically. And the other difference to other methods of sale is that click to purchase provides for an ability to call a tender. So those in the property industry will be aware that when someone says, give us your best offer by 12 o'clock, they never do give their best offer by 12 o'clock because everyone knows that the negotiations carry on for hours. It's never, it's not transparent. The agent gets phone calls afterwards. People try to gazump each other, etc. The click to purchase was designed to provide a mechanism whereby the system shut down at 12 o'clock. If you make your offer at 12:01, you can't. The system will not allow you to do so. Therefore, when you call a tender, it really is a genuine tender. It's a blind tender, and the agent, on the instructions of the client, will accept the highest offer, and the deal's done. And that's it. It's done instantaneously. Whereas the traditional market will call a tender, instruct solicitors, spend 2, 3, 4 weeks, then exchange the contract, by which time probably the buyer's either withdrawn or chipped the price.
Right. So it's a case of having all of that information in place, all the legal information for the buyer to do their due diligence well in advance. So that's probably the longest part of the whole process, really, making sure that the seller has got everything in place and all their ducks in a row.
Well, it should, but it shouldn't take long. It shouldn't take long. I mean, it's down to the quality of the lawyer.
Right. So then there's no kind of issues with inquiries or anything like that because it's all there already for, I guess it's kind of a tick box exercise, is it? I'd imagine that, the solicitor would have to kind of go through everything and just make sure, right, are we going to be able to answer every question here that the buyer...
Well, ideally, you answer the questions before they're asked. You have a full legal package. You have CPSC inquiries, and it's you wouldn't go to, if you occasionally look. Don't get me wrong. You can always ask the selling solicitor a question or ask the agent a question, but ideally, the answers all provided at day one. Because that then allows competition amongst the buyers. And we've never once had a buyer moan that this process wasn't fair, even if they didn't buy the building, because the transparency of what we offer.
It's all completely there. That's
Yeah,
interesting.
well, all we do is make it easy to buy buildings. I mean, the mechanism of buying properties in the UK is archaic, in my opinion. I've
Yeah.
travelled quite a lot, and the way we go about buying properties in the UK makes no sense. And if you go, you can agree to buy someone's house. You've got no binding agreement other than a letter from an estate agent. You can spend money with your bank. You can spend money on a survey,
Yeah.
and then the buyer says, "Oh, I've changed my mind," or the seller says, "I've changed my mind," and that's it. There's no comeback whatsoever.
Mm.
It's not the same in other countries. It's a very strange system we have here.
And on that question of surveys and things like that, is that included as well in the kind of, I guess we call it due diligence packless. I'm not sure what you call it, but yeah.
Well, look, remember, we're providing the mechanism. What the agent does in terms of how they sell is up to them. My own agency um, never provides building surveys. It is down to the buyer if they wish to do a survey. But I can tell you that 95% of the time, people do not do surveys
All right. Why do you think that is?
because the properties that we're trading are investment properties,
Right.
and the the lease will normally provide for the tenant to have the obligations to maintain a property.
Hmm.
If you go, but you also have to, it's also the area that I operate in. If the institutional end of the market would never buy a building without doing a survey, but I can just tell you from experience, the majority of people do not do surveys because
Yeah.
they take a view. If they want to walk around it with a building surveyor, let them walk around with a building surveyor.
Yeah. That's true. And so, in terms of the, the other countries that you've kind of worked in, so you've worked in, is it the Middle East and Australia, those kind of
Oh, me? No,
jurisdictions,
no, no.
or
What we've done as a business, now what we've done as a business, we've started to provide our marketing through a network. We operate something called the SV International Network, whereby other agencies are able to join the network and cross sell to investors in different locations and use the technology of sales and execution which we've created.
oh, I
And
see.
we are currently we have partners in Ireland, Scotland, and in South Africa, and we have been in advanced discussions to open in Australia, which I hope we will finalize. So we're trying to grow the network because what the internet has done is shrunk the world. So
Yeah,
now, you can sell to an investor in Australia as easily as you can sell to someone around the corner.
yeah, that's great. And what kind of regulatory constraints are there in bringing forward, a blockchain innovation like this forward? I mean, have there been any kind of constraints or impediments in kind of advancing what you do?
Oh, well, all we're doing is, well, no, but I don't think blockchain as such is actually regulated. All we're doing is actually putting the purchase process legally online. So it would amend per jurisdiction. So, for example, in South Africa, there are certain requirements relating to what's called the FICA requirements, which relates to identity, which are different to the identity requirements in the UK. So I don't believe there's a regulation around the blockchain technology. I think what we're doing, remember, is we're just recording the legal process in a ledger.
So you're following the essential, the legal processes of a given country, and then just applying your technology to it, right?
That's right.
Yeah.
Correct. That's right.
Okay. And
That's right.
so, were you involved with the Digital Street Program initiative back in 2019? Am I right in understanding that? And kind of helping land registry kind of streamline a lot of their processes.
I wasn't involved. I actually was involved with something else. I was involved with the Ministry of Justice,
Right.
where a group was formed in 2000 and it's probably around 2020, if I remember correctly.
Right.
Um, it was it was called the Industry Working Group relating to electronic execution of documentation, and it was chaired by a a judge called Lord Justice Peter Fraser. Prior to him, Sir Colin Burse, and involved people like Sarah Green, who was a law commissioner, and there were various lawyers and lay people on this group, and there were 16 people on the group, and it was brought together to provide advice in relating to encouraging business to use digital signing to speed up business, and secondly, to recommend changes to the law in the world of digital signatures. And given that I had built a signing platform, I was asked to join, which was really very interesting. So no, I am aware of the digital street thing. I think related to blockchain within the land registry.
Yeah.
I think, but I haven't heard anything about that recently.
Yeah,
I'm
because
not
it kind
sure.
of faded out, and I thought to myself at the time that there was some real progress being made, but it doesn't seem like it was advanced in the way that was originally envisaged, you know. But yeah, I mean, on that question, do you feel that? I mean, what kind of barriers do you think are preventing, you know, widespread adoption of you know, technology like yours and the adoption of blockchain in property transactions?
Um, Let me tell you about blockchain generally. This is my view, not
Sure.
everyone else's view. I would always say to people, you don't need to understand how blockchain works. You just need to know it's there. It's a bit like when you buy a computer and it says Intel inside. You don't know what Intel inside means. You don't need to know what blockchain. Blockchain was really a rubber stamp of transparency by having a security. It's a security system. It's an audit trail of transactions. That was the idea behind blockchain. And there was an enormous hype around the whole process of blockchain. Businesses were raising money. There were things called ICOs where you could raise money and you could tokenize your business. It was a massive industry grew up around the hype around technology of blockchain.
Hmm.
However, in my opinion, it was huge hype.
Hmm.
And we were part of that in that we thought, let's get involved simply because we didn't know where it was going to go. The reality is you don't need blockchain technology. Blockchain technology is purely an audit trail, a secure audit trail, in my opinion. In the same way, cryptocurrency, which has got all this hype. I mean, I was involved years ago. Of course, I should have bought a load of Bitcoins, but I never believed in it.
Yeah.
I never believed in it. And I have to tell you, even now, I don't see the point of it. And the reason and I can explain very simply to people listening my opinion why cryptocurrency and blockchain really doesn't have a future. The whole point about blockchain technology was in order to keep someone's identity secure and private so that you didn't need to know who you were transacting with, because money in your wallet was provably your money, but no one needed to know who you were. That was the whole point of it. It was to keep your identity secure and private. Well, the world has changed. Now you can't do anything without clearing anti-money laundering regulations, and that goes for most countries. So if I were to send you £1 million worth of bitcoins, you would have to, you know, to buy a house, let's say, you would have to money launder me and my wallet to understand where that money's come from.
Right.
So on that very basis, what's the point?
Hmm.
Might as well just send it to you in pounds. Why send it to you in
Insecure.
bitcoins?
Yeah.
So I personally believe that this huge hype is now dissipated, and you don't hear about it. You don't hear it talked about because it's not really needed. I also don't believe. I actually be interested in what happens to cryptocurrency, but I don't really. I don't. There's no. Also, the other reason, personally, this is my view, why I don't believe cryptocurrency will survive is because if you think about it, when you have dollars or sterling or any currency and you have it, I know it's all digital these days, but if you had a £20 note, you took out your £20 note, it says on the £20 note, the bearer promises to give this, the bank promises £20. The bank being UK PLC. So the government, the country is standing behind their currency. That's what, so The
Mm.
value of your currency is a reflection of who's promising to pay the currency, the
Mm.
dollar, sterling, etc. There's no one behind a cryptocurrency. There's no asset. There's no one promising its value.
Mm.
So, in
It's
my opinion,
by code effectively, right? It's backed by the technology itself. That's all that backs it, right?
well, um, well, there's no one promising the bearer that they will receive the money. There's no asset backing to the currency. Currency is asset backed by the country. There's
Yeah.
no country backing the blockchain cryptocurrency.
Yeah.
The other thing is the idea that you can move money around the world in blockchain. Of course, this seems to happen with the famous people famously talk about um, drug money and all this business.
Yeah.
There's no way a government is going to allow the control of its currency to move away from its central bank. You imagine the UK, the Bank of England controls monetary policy in the UK. There's no way that the UK would move to have its currency, which is based upon a mechanism which is outside the control of the central bank, because you've got no way of controlling interest rates, money supply, inflation, etc. There's
Mm.
no way. There's no way it ever
Yeah. They
happen.
wouldn't want to lose
So,
control.
so
Yeah.
what's the point? So that's again my view. Why I think that I personally think that it's probably um, um, I question where it will be in the future.
Yeah.
I think
Yeah.
I think the only reason there is value to a cryptocurrency is because someone else is prepared to pay X for that piece of cryptocurrency.
Yeah. To kind of create its own economy. So you kind of move away from using the word blockchain, and you're just kind of building a technology platform really that streamlines the buying and selling process of properties. Is that
We
fair to
we
say? Or
we yeah we
it's called
I think
blockchain, but it's not. It's
I
kind of just a label, really.
the blockchain we were doing click to purchase before you started to use blockchain technology.
Yeah, yeah.
But we think that I believe that today there's more power in data than in the most important the most key technology for anyone is data, and the property industry, in my opinion, fails to understand how powerful data is.
Mm, mm. Interesting. Just going back to that question of tokenization, I know we touched on it before. Um, you don't feel that like a platform like yours or other similar technology platforms that are appearing in the blockchain space are going to work from that perspective. I know quite a few years ago, and obviously there's quite a few platforms that exist now, that the kind of crowdfunding model where a bunch of people can all get involved in a property development or an investment of some kind. Could blockchain be deployed into those kind of investment strategies a lot more effectively? Or do you just think it's just like, we've got crowdfunding, let's just kind of keep it as it is?
Well, you got to understand what the hype behind blockchain was. The idea is that because it's tokenized, you've got a building, you can break it down into 100 units. That's
Yeah.
the idea behind it. And therefore, because you've got 100 units, you could sell one unit at any one time to the next person and so on. That was the whole hype about tokenization.
Yeah.
But really, tokenization is not new. Syndication is not new. It's been around for years. It's an old there are well-known companies who've been syndicating property for years. The points about and the hype around blockchain was the idea was that if I have one unit in a building, blockchain allows me to sell my unit very quickly to the next person. That's the idea behind it. And therefore you end up by being able to buy and sell parts of a building. Well, the reality is you can't buy and sell a piece of your building very quickly because the law provides that you have to understand where the money's coming from. So you have to still do money laundering, identity checks on where you're receiving money from. And secondly, there has to be a buyer for your unit. If
Mm.
there's no buyers for your unit, what are you going to do? Now, there was something that I think is collapsed now. There was a system called IPSX, I think it was IPSX. It was the idea was that some companies would syndicate very large assets. I think it was a very large asset in Birmingham was put on this exchange, basically effectively a stock exchange for selling properties, where you would buy a unit in a property, and the idea you can then trade that unit in the property. Problem with all that is that there's got to be a market. There has to be a secondary market. There have to be people who want to buy and sell units.
Mm.
I don't personally, I don't see why blockchain it makes any difference to your ability to find a buyer.
Yeah.
So I actually think that syndication has always been there, will always be there. I believe there are platforms online which allow people to put money into properties or put money into loans, and technology today allows things to happen far more quickly. Not the fact that it's got a blockchain stamp doesn't necessarily make it any easier or faster.
Yeah. Yeah.
That's my view.
No.
I think a lot of people got carried away with the hype.
Yeah, I think that's what it is, and it's kind of dissipated somewhat over the last few years, I think. And so, in terms of what you're doing at Click to Purchase, what are your plans moving forward? Driving the business forward and driving the platform and getting the platform out there amongst agents and that kind of thing.
Well, we were at one time looking to offer um, the platform to other agencies, but we found that we were very early. We found that agencies are generally quite technophobic,
Mhm.
and whilst it has been very successful for us and it helped our business, other agencies have been a little bit more reticent to get involved. Maybe because I'm an agent, so they therefore think that I'm competition. So we're not really. It's available. If people want to use it, they could come to us and they could use the technology. But we're not really pushing it in the same way that we perhaps might have done 5, 6, 7 years ago. What we're now doing more of a business is the data sharing, which I mentioned earlier. We think that data is probably become more important than execution.
Mhm.
So it's been a slight shift. But the technology is there and we use it every day. I mean, I sell buildings. We sold a building recently to give you an example, we sold a building in Letchworth, let to Starbucks in less than a day. Put it on the market on a Monday, it was sold on a Tuesday. And
Right.
that's not uncommon. And that's using the technology. So it's a very powerful thing for both buyer and seller. Where it will go in the future, we'll have to see. And people are very welcome to use it.
Yeah.
I think what we've tried to do is in everything we've been doing is reduce that time scale of 4, 6 weeks to do a deal, which is just painful and uneconomic. And we've tried to reduce that to allow transactions to occur very quickly and easily, which we have proven actually.
Yeah, for sure. And when you say data, could you go into a little bit more? Could you elaborate on that a little bit more in terms of the power of data and what you mean by that?
I think how an agent makes their living, they trade data. By that, I mean, an agent says to an owner of a property, I know who will buy your building. And they know someone who they think will buy the building. They have a little black book, and in their little black book, they've had various meetings. They know people are in the market for that type of building. So they are making their margin. They are earning their fee by introducing a buyer to a seller by trading data.
Nice.
What's happened in the last 5 years, maybe longer, is the way you collect data is very, very important. And and yet agents still don't like to share data. They're worried that it is their livelihood, and therefore the industry doesn't really seem to understand the power of sharing that data, in my opinion.
Right. Right. Interesting. This has been a really fascinating conversation, Neil. Really appreciate your time. How can people find out more about you, what you do at Click to Purchase, and yeah, generally get some more information?
If they want to get in touch, the best way to do so is probably go to our corporate site, which is singervl.international,
Okay.
and they'll be able to contact us there, anyone in the team there. And yeah, if they want to talk to us, we'd be delighted. Thank you.
No problem. I'll add that into the show notes. So yeah, Neil, thanks very much for your time. It's really appreciated and really interesting conversation.